Hi, Dean Jenkins from FollowMeTrades.com. Wow, the last 6 months have been super interesting in the market. I wanted to create just a really short video and recapture some of the market analysis that I've been publishing for my subscribers and some of the trades that we've been taking. If you're interested in my service, this quick snapshot might give you a real good sense of what's been going on, and I thought it would just be fun to recap it. So let's just take a quick look. I'm going to start with the market analysis that I did back in early August of 2015. Let's take a look. I give it a 90% probability that we're in the bear market now. If we take out this low here, it's 100% in my mind. Well, if you remember, we were right, and we did take out that February low, and we took it out with a vengeance and then some. And because we were on the right side of the market, we saw this coming, we took some great trades. Let's take a look at a couple of those. Ingersoll Rand is one of these trades that we got into. We got in late July on the 27th, and the day after we got in, it gapped down. That was awesome. You always like that when you're short. It went down and just got almost to our target zone, reversed a little bit. We had scaled out twice, taken profit. We trailed our stop down. We ended up getting stopped out at 57.56. It was a really nice trade. We were in it just over a month. And on the shares directly, we made 13% profit, or $4,329 based on a $100,000 account. So a real nice trade, and with the options, of course, much higher percentage on that. So that was a great trade. Ingersoll Rand last summer. Goldman Sachs GS is another one we got short on August 11th. We went short at 203.43. We scaled that, took profit down the way. We trailed our stop down. It actually made it into the target zone. Retraced back up. We got stopped out at 190.26. We were in now less than a month. We were in at 29 days. Made 7% just on the short on the shares. It'd be $2,703 in a $100,000 account. I think we made 50-60% on the option play on that. So really nice trade. Another good example of just being on the right side of the market. And it's not all just short. Here's one TVIX that we went long on, and we got into this one at 11.24. We scaled out, took some really nice profit up here as it went up, and then it turned around. We got out of this one. We were in TVIX 23 days, made 24% profit on a pretty quick trade. Really nice. After the decline of August and September, the market recovered a bit. And we're trading with the market. We found a really nice trade here on LOVE, LUV, Southwest Airlines. We got into this one at 40.57, rode it all the way up, scaled out a couple times, and ended up being in LUV for 50 days. We made a 12% profit, $2,624 on a $100,000 account, and we were trading that with options, and again, 50-60% profit on the option trade. So we ended up 2015 with a pretty nice profit. Total for the year was 28.63 in the entire portfolio. A little bit down from these previous years where we had better, but it was kind of a tough market. It channeled, then it dropped, then it went back up, and then started back down. And the whole thing is about the reason we're able to be really pretty consistent, make good profit, is it's all about our risk control, and then picking really good trades, and then the losers are small and the winners are big. But we ended up 2015 with a pretty good year. I was pleased with those results for the market we were working in. So we ended up 2015 with some really nice profit. And in December, I saw that bear pattern forming again. The market pulled up a little bit from summer to the end of the year, and then I saw that bearish pattern forming again. And here's my update from December 19th, my market update that I published to my subscribers. So I'm going on record right now. I believe that the bear market has started. And I think I always talk about this pattern of lower lows, lower highs. We had this low, a lower high, and we've put in a new low. We took out this previous low level, and I think that has meaning. I think the market is going to head down now, and it's going to correct. Well, that was the update I published. I did the analysis on 12/19, published it for the week of 12/20, and correct the market did. From that point, it went down to a low on January 20th, 1,500 Dow points lower. So once again, because we saw this market correction coming, we're on the right side of it. Here's the open trades we're in this year right now. We've got, I think, about 9 or 10 open We're short China with the MCHI ETF. We're short Abbott Labs. Ingersoll Rand, again, we're in that. FedEx, United Technologies. We're long Sientra. We're short the Spiders. We're long Silicon Graphics. We're short Starbucks. And we are long ELLI. And you can see we're deep in profit. We haven't closed a trade yet this year, but we're deep into profit. The whole account, based on a $100,000 account, is up 15 grand right now, 15.77%. And many of these where our stops are already below our entry level on the shorts or above it on the longs. So we've got profit locked in. The only question is how much are we going to make, which is really a great position to be in. You can see on the option contract, some of these are just deep into profit. MCHI 166%, Abbott 117%, IR 45, FedEx 113%. So really nice profit. The year's off to a great start because we're on the right side of it. And that doesn't mean we're just taking shorts. Again, there's some longs here. As the market goes down, there are things that go up. And I'm not trying to imply there aren't losers. There are losers occasionally, but our method, we keep them really low, really small. In fact, we went short Abbott Labs and UTX late last year, and we took small losses, like $400 on one, a couple $100 on the other, and then the pattern finally played out, and we're back in them, and we're deep into profit. So, trades do occasionally lose. That's a reality. But we're on the right side of the market. We've got a good method for analyzing stocks. We've got a great method for analyzing or for managing risk. And so our winners are big, our losers are small. We're on the right side of the market, and we had a great year last year, and we're on track for another really good year this year. Well, this has sure been encouraging to look back 6 months, and frankly, it's been just a little bit of fun to see where we were. It's been a pretty dramatic market. We've been on the right side of it. We've made some great profits, and I see some really fun stuff coming up. Gold may have found a bottom. There may be some real opportunities there in gold mining stocks. Energy may be rebounding. There may be some good trades there. The indexes are heading up just a little bit right now. I'm recording this on January 29th. And there may be some sectors like banking that have really been beaten down that may have some good long trades, some corrective wave trades. But don't be fooled. The bear market is still underway. We may go up a bit, but we're going to go put in new lows this year. There's just a really high probability of that. I invite you to subscribe to my newsletter if you want to stay up with what's going on with my look on the market. I always look at the indexes, at oil and gold, or to subscribe to my stock pick service. I think it's a great value. You get a 10-day money-back guarantee, so you can try it. You get 2 weeks worth of picks. If you don't like it, you can cancel and get a full refund. So it's a pretty low-risk way to check it out. So I invite you to either the newsletter, the stock picks. Well, that's it for now. I sure enjoyed this. Thank you for listening, for watching, and we'll catch you on the next update. Thanks.